Let's be real. When you hear the words year-end tax planning, your first thought might be, ugh, do I really need to think about this now? Let me tell you something. Yes, you do. Because the decisions you make in these last few weeks of the year could save you hundreds, even thousands of dollars. Think about this. What would you do with an extra $1,000 in your pocket? Invest it? Go on a trip? Maybe finally get that thing you've been eyeing for months? Well, stick with me, because in this video, we're diving into maximizing tax benefits before year-end, strategies for investors. I'll break down practical, easy-to-apply tips that can help you minimize your tax liability and keep more of your hard-earned money. And don't worry, I'm keeping it simple, actionable, and jargon-free. By the end, you'll feel confident and in control of your finances. And here's the kicker. Hack 5 could save you more than just money. It could protect you from costly mistakes. Let's dive in. Why year-end tax planning matters. The problem: missed opportunities. Here's the thing. Every year, millions of dollars go unclaimed in tax benefits simply because people don't act in time. They miss deadlines, overlook deductions, or procrastinate until it's too late. Think about how hard you've worked this year. Every late night, every early morning, every extra effort. Now imagine handing over more of your money to the IRS than you need to. Feels unfair, doesn't it? The challenge: complexity. The tax code isn't exactly bedtime reading. It's confusing, overwhelming, and constantly changing. But don't worry, you don't need to be a CPA to take advantage of tax-saving strategies. You just need the right roadmap, the opportunity, your time to act. The end of the year is your chance to take control. It's when you can make adjustments, contributions, and moves that directly impact your financial future. And trust me, a little effort now can pay off big time later. And no, you don't need to quit your day job and become a tax expert. I've got you covered. Now that you know why year-end planning matters, let's start with one of the easiest ways to save: contributing to tax-advantaged accounts. Maximize contributions to tax-advantaged accounts. Tip 1. Max out your retirement accounts. One of the smartest moves you can make before year-end is maximizing contributions to your retirement accounts. Not only are you investing in your future, but you're also reducing your taxable income for this year. How it works: 401k. If your employer offers a 401k, make sure you're contributing enough to at least get the full employer match. That's free money. For 2024, you can contribute up to $22,500 if you're under 50, or $30,000 if you're 50 or older. IRA, for individual retirement accounts, the contribution limit is $6,500 or $7,500 if you're 50 or older. Contributions to a traditional IRA may be tax deductible. Action step: log into your retirement account right now and check your contribution levels. Can you add a little more before December 31st? Tip 2. Don't forget health savings accounts. If you have a high-deductible health plan, an HSA is like a triple tax win. Contributions are tax-deductible, growth is tax-free, and withdrawals for qualified medical expenses are also tax-free. Limits for 2024: $3,850 for individuals, $7,750 for families. I know someone who maxed out their HSA for years and used it to pay for a major medical expense without touching their savings. It's a powerful tool and one that's often overlooked. And hey, even if you're perfectly healthy, you can use an HSA for things like glasses, dental care, or even that emergency box of Band-Aids. Maximizing contributions is a great start, but what about your investments? Next section, we'll cover strategies for harvesting losses and optimizing your portfolio. Tax loss harvesting and portfolio optimization. What is tax loss harvesting? Tax loss harvesting sounds complicated, but it's really just a fancy way of saying turn your investment losses into tax savings. How it works: if you have investments that have lost value, you can sell them to offset gains from other investments. This reduces your taxable income. You can offset capital gains dollar for dollar. If your losses exceed your gains, you can deduct up to $3,000 against your ordinary income. Any unused losses can carry forward to future years. Action step: Take a look at your investment portfolio. Identify any underperforming assets and talk to a financial advisor about whether selling them makes sense. Beware of the wash sale rule. The IRS has a rule called the wash sale rule, which means you can't buy the same or a substantially identical investment within 30 days of selling it. So, plan carefully. And no, trying to outsmart the IRS isn't worth the stress. It's not like they're known for missing the details. Portfolio rebalancing. Year-end is also a perfect time to rebalance your portfolio. Make sure your asset allocation aligns with your financial goals and risk tolerance. Action step. If your portfolio has drifted, consider reallocating to maintain your desired balance between stocks, bonds, and other investments. Harvesting losses is smart, but what if you could use charitable giving to save even more? Section 4 has you covered. Use charitable giving to reduce your taxable income. The power of giving back. Charitable donations aren't just good for your community, they're great for your taxes too. How it works. Donations to qualified charities are tax deductible. If you donate appreciated assets like stocks, you avoid paying capital gains tax while still claiming a deduction for the fair market value. Action step. Identify a cause or organization you're passionate about. Make a donation before December 31st and keep the receipt for your records. I once met someone who donated appreciated stock to their favorite charity. Not only did they feel good about supporting a cause they loved, but they also saved thousands in taxes. And no, donating your old socks doesn't count. Let's aim a little higher. Charitable giving is just one way to optimize your taxes. In Section 5, we'll cover retirement strategies you might not have considered. You've just learned some of the most effective year-end tax strategies to save money and maximize your investments. From retirement contributions to charitable giving, these tips are your roadmap to financial optimization. But this is just one piece of the puzzle. If you want to take your financial planning to the next level, check out my video on 2025 Financial Planning to Avoid Crisis. Here's what you'll learn in that video. How to create a bulletproof financial plan for the year ahead. Strategies to manage risk and build wealth in uncertain times. Tips to stay ahead of economic challenges and thrive financially. Hit like, subscribe, and share this video with someone who needs a financial boost. And let me know in the comments, which strategy are you most excited to try before the year ends?